Alright, now that we have understood what is a share, what is the concept of profit, dividend, capital, growth, and things like IPO, FPO, the primary market and the secondary market, we now come to the investing part of it. How do I start investing in the stock market? This is the question for which you need an answer, isn't it? So the first thing to understand is that we do not invest in the stock market. Alright? We invest in the stocks of a company. It is a common slang to say that we are investing in the stock market, but actually we are not. We are investing in the stocks of a company, not the stock market. And the other question which may come to your mind is whether the stock market and the stock exchange are two different things. Many of my students have asked me whether the stock exchange and the stock market are different and what is the difference between them. So you need to understand that the stock exchange is just a building with technological infrastructure, lot of high-end servers and sophisticated electronic things in the stock exchange building. That's all. And this stock exchange connects the buyers and the sellers, the buyers of the stock and the sellers of the stocks through their respective brokers. And then the stock exchange executes the trade between them automatically. The trade between the buyer and the seller, the stock exchange executes that trade. And there are expert people manning the stock exchange, though most of the things are automatic. So if you try to understand, consider that this building, this is the Bombay Stock Exchange building. So this is a stock exchange, just a building with lot of high-tech infrastructure in that building. Alright? And on one hand, you have the buyers of the shares. And these buyers are connected to the stock exchange through their respective brokers. There may be a large number of brokers in the environment, and each broker may have several clients. Depending upon your choice, the public can go to whichever broker they want. And broker does not mean an individual. In fact, in olden days, there used to be a broker who used to be a person. But in the modern times, the brokers are not individuals or persons. They are large institutions. In fact, a broking firm could be a large firm, not an individual. Alright? So on one hand, you have seen that there are buyers connected to the stock exchange through their respective brokers. And on the other hand, there are the sellers. Okay? The sellers are also connected to the stock exchange through their respective brokers. Now, there is no clear-cut distinction between buyers and sellers. A buyer can at times become seller and a seller at times can become buyer. Alright? And the beauty is that nobody meets anybody. All the transaction, everything on the stock exchange happens over the internet. Sitting in the comfort of your room, in your house, you can transact, buy shares, sell shares, and do all sorts of things. What is done in the stock market. Alright? So now the question comes that what is a stock market? We have understood what a stock exchange is. Alright? But what is a stock market then? You see, for buying and selling fish, you have a fish market. For buying and selling vegetables, you have the vegetable market. Similarly, for buying and selling gold, you have the gold market. For clothing, you have the cloth market. But there is no specific place for buying and selling shares in the modern times. In olden days, the buying and selling happened to be at one place, and that was the stock exchange. But in the modern times, it does not happen at one particular place. You can do that buying and selling from the comfort of your home, or while you are traveling in a bus or in the car or in the train or waiting for the aircraft at the airport. With your laptop, you can buy and sell shares at any place. All right. So therefore, the stock market in the modern times is just a notional environment. It is not a specific place. All right. This notional environment, which is called as the stock market, is that environment which facilitates buying and selling of shares. All right. So you got the difference between the stock market and the stock exchange. Stock exchange is just a high-tech building connecting the buyers and sellers through their respective brokers, while the stock market is the environment which facilitates all this. All right. So now we come to the question as to how do you start investing or trading in the stock market? How do you buy and sell shares? So the first thing that you have to do is open a bank account, open a trading account, and open a demat account. We have seen this earlier. We have talked about this. All these three accounts are necessary, inescapable, and essential if you want to either buy, sell shares or sell shares. All right. And preferably, you must open a 3-in-1 seamless account. What do you mean by seamless? Seamless means they are jointless. Normally, a single broker would open all the three accounts for you. All right. So what happens is that your bank account, your trading account, and your demat account are seamlessly connected to each other. You can choose any broker or a broking firm of your choice to open the 3-in-1 account, depending upon in which country you are in. Every country has got several numbers, or in fact large numbers of such brokers or the broking firms. Each of them will charge you a different fee and provide you some different facilities. Facilities in the sense, the convenience of operation, but otherwise primarily they provide you only one thing, that is the facility of buying and selling the shares. All right. So when you open this 3-in-1 account, what happens is that you use the trading account to transact. Transact means to connect with the stock exchange through your broker for the purpose of buying or selling the shares. So for the purpose of buying and selling the shares, you use a trading account. And when you do that, when you take the action of buying the shares, the money will automatically go from your bank account and the shares will get reflected in your demat account. I have written this reflected in inverted commas because the true meaning of that you will understand when we talk of something called as the depository and the depository participants. But for the time being, for our understanding, just try and understand that when you buy the shares, the money goes out from your bank account and the shares come into your demat account. And when you sell the shares, then the shares will go out from your demat account and the money will automatically come into your bank account. Alright? A word of advice from me at this juncture. See, when you are investing in stocks, I would recommend that you keep your bank account for the purpose of investment separate from your normal routine bank account. It is not mandatory. The same account which is linked to this trading and demat account, this seamless account which we talked about, the same bank account can be used for your other normal routine transactions also. There is no embargo on that. But to keep things simple and to keep investment separate from your normal expenditure, it is always recommended that your bank account, which is a part of this 3-in-1 account, should be separate from your normal routine bank account. Alright? Now, in the next lesson, we shall talk something about depository and depository participants. Alright?